Hey guys, what's up? Stock Retail coming back to you. Got a couple things on my mind today. Real quick, because I have a few new followers the last few days. Um, just want to share with you if you haven't followed me on either X, been here the whole 4 years of this crazy journey with AMC and GameStop. If you haven't followed me on X and Reddit, or perhaps I don't know, 2+ years I've been on YouTube as well, uh, then perhaps you don't know a little bit of my background. So bear with me, all of you who've heard me say this too many times already. I come from the corporate world. I worked for 21 years at a Dow Jones level company, and my background actually was in leading teams in sort of like forecasting, planning, and some other things, both in kind of, let's say, supply chain and finance, and connecting a lot of dots across the company. And so, what that's lent itself to me, as I've sort of fallen into this AMC journey, which you can kind of hear my story a little bit in the last video before this. Um, I have been a bit of a DD ape in terms of just numbers, number crunching, spreadsheets, forecasting. And so I've got a history over a few years now of very accurate box office predictions. So sometimes I'll put out videos to share the forecast of the box office. And that's just fun. I'm obsessing the movies and obviously loving my stock, and so you'll see that from me. So I've got a track record of being real accurate with the box office, and then as well with earnings. And so what's interesting is that, I don't know, for 10 or 11 quarters, I was even beating Wall Street in terms of accurate prediction of AMC's earnings. We're talking like 97, 98% accuracy. There was one quarter, I think I was only $100,000 off at the bottom line. So that was like 99.9% accuracy. That was a little bit of dumb luck. Had some items that I missed under and some items that I missed over, and they kind of all washed out. And so, what I've done for all of this time, it actually goes all the way back to a story with a billionaire named Jim Chanos. When he was spreading some FUD with Gasparino, I created something you would find on Reddit all the way back in 2021 called the FUD Buster. And it was just a quarterly scorecard I committed to doing for myself and I share with everybody. So since 2021, I've been sharing this quarterly review of our financials and how did we do and kind of, red, yellow, green light type of thing. And I haven't done that yet for Q3. And a lot of people have been asking me because now, it's a bit later than I normally would do it. So I forecast before the earnings come out, and then I go back and I review after the earnings come out. And that's a way we can kind of review the financials. And I think some of my followers are learning along the way of how a business person looks at financials. And so we're going to do that today. And I want to just share, it took me a minute, obviously, to get to Q3. And a lot of people have asked me a few times. Probably about half of you asking are genuine and just want to see it, right? You're used to me sharing that, you want to see it. And then half asking are because they want to sort of troll a little bit because Q3 didn't turn out the way we wanted it to. I'm going to admit that. I'm going to show you that. But I want to ground us in where we are before I share that too. So let's go ahead and go through just kind of a quick refresher. I'm about to just share, I think, 4 slides that I've already shared before. So I'm going to buzz by these. If you haven't seen these as I buzz by them, and if I go too fast for you, go find 2 videos recently in my feed that are kind of about 2025 and about cash flows, and those will take you through these. And if you've followed me for a while, then you've seen these. But we need to be grounded in where we are now as I go look backwards in the rearview mirror at a quarter that ended at the end of last September. And so I'm going to skip the animation here. The first thing that I've been trying to share with you is obviously we've got Dogman coming out this week. We've got Love Hurts coming out and Paddington and Captain America and Snow White. And so we've got a bunch of big movies coming. By the way, Sinners and Mickey 17 kind of flipped. And so I hadn't changed this slide yet, but I did say that on Twitter if you follow me there. So it's just kind of a swap out. Mickey 17 came forward to March, Sinners pushed out to April, and they just sort of traded. Bit of a wash there. I think I've got the forecast for Sinners a little bigger than Mickey 17, but still excited for that. Excited for both of them. But then especially if you look, and I just didn't want to try to fit a whole bunch of images on this screen, but if you look at those other 3 quarters, these 3 lists, what I was telling you on the other videos is how big those quarters are going to be and how I've got the box office for 2025 forecast well above 9.5 billion even. I think I had like a 9.7 or a 9.8 number. I've been calling it 9.5 to 10 this year. Originally, the industry had said 9, and so kind of as a nod to the accuracy I've had, after the industry said 9, there were a bunch of articles. I came out and said no, I think it's more like 9.5 to 10, and then sure enough, the industry started saying that number as well, like the day after I said it. So if you don't think we're watched, there's a little bit of a nod to that. Either way, the point is we have a lot of big movies this year. And so I was showing you that as well. I mean, this is 60 of the movies, and we're going to have obviously a lot more than 60, but just these 60 alone make the year a really great year. There's some really big movies in here. And do keep track, because you will see some movies pull in that we didn't even hear about yet. You'll see a couple movies push out for various reasons. It just always happens. And so that's why I come back, and every quarter I'll do a forecast refresh for you and share how we're tracking and where we're going. But the main point is, I had said I believe the full year 2025 that AMC may see bottom line profits on the full year. And so it was kind of a discussion on cash flows as well, because there's some folks out there trying to sort of make you scared about that. And I had shown you where we've come from, so that in 2023, if you recall, we actually had 2 quarters in a row with bottom line earnings. We had positive earnings and positive cash flows. If you think back to like the Barbenheimer quarter and all of that. And so that was before the strike. And then the strike hit and we took a big step backwards, right? But I want you to just remind yourself, wait a sec, we had 2 quarters in a row that were profitable. We already did that clear back in 2023. And we were on the right path, growing. And that's before popcorn and before candy and before a whole lot of debt got paid down, right? So we have improved our fundamentals since then. We've been waiting for the box office to return. And so what I was showing you is a rolling 4-quarter box office view. By the way, again, if you're new to following me, I talk a lot about the domestic box office. That's what you're seeing here, because I can kind of extrapolate or pull out to a global view of AMC's earnings based on kind of a history of where the domestic box office was. I can kind of get to what our business in Europe is going to be and all of that too. So when I do AMC earnings forecasts, I do look at the whole globe, but I use the domestic box office as a big kind of marker to tell me how we're doing. And so what I wanted you to see was, if you looked at a rolling year, so like you can see here's just 2024 that we just recently finished, those 4 quarters added up were way down here. But now you kind of are starting to swap out these strike quarters for better quarters. And so you can see the rolling 4-quarter that we are in now as of Q1 2025 starts to get a lot better. And then we just start going way up from there. Okay, so I just want you to see that if we're here, this is a time to be buying a stock, in my opinion, not a time to be selling it. And you guys get it. Like I had kind of had a whole conversation on buy low, sell high. So if the stock is low, but the industry is headed up and to the right, it just smacks of value, like smacks you right in the face. And so that's what I'm looking at as we think through how 2025 looks. And if you haven't seen, the industry itself has been saying that 2026, if you look at anybody on Twitter, you look at articles, people are talking about 2026 not just being kind of more recovery at the box office, but maybe even an all-time record. And so I've shown you in the past some views of what kind of profits AMC is making when the box office starts to get even higher than this, and it starts to get really, really big. We're talking about kind of printing money at AMC. It's going to get real good. So the other thing, the last review item here, was I was showing you the view of our debt, and you can see that right now we're way below our 2019 debt, which was pre-COVID. So that's another mark of AMC's direction. If the industry is going up and to the right, AMC's debt is going down and to the right, we're getting healthier while we're starting to bring in more revenues. At the end of the quarter that I'm about to show you, we're going to do this Q3 review, which ended September 30th. We had basically 4.05 billion. And remember that we've paid off, AMC announced after that they had paid another $45 million of debt down. So that's why I'm saying we're basically down at 4. And then remember that pretty soon here, I've reviewed in a few videos that AMC will pay off another $414 million of debt, because that's going to flip to shares. And so pretty soon here, we're going to be well over $1 billion less debt than pre-COVID. So I did a whole video recently, if you want to see that, on our interest payments. Just look up something about our interest payments in one of my recent videos, and I kind of review all of that too. Okay, so that's where we are. So remember, just ground yourself, because I'm going to look back, what is today, almost the end of January. I'm going to look back like 4 months ago, pretty much. And really, actually, the quarter began in July of last year. So I'm going to review a quarter that starts 6 months ago, or whatever, maybe even 7 months ago. So just keep that in mind. But before I finally get to the numbers, I need to remind you something that happened in the quarter that I'm reviewing, because things that happen in the world around us impact our business, right? And there's something I think some of you missed, and there are two videos on this. So the first video you would find September 7th. All of a sudden, what we saw was a group of, I'm going to say, so called conservative accounts. I do not believe they're actual conservatives. I believe, so this is not a political statement, in other words. I believe they are PSYOPs accounts. I believe these are manipulators and influencers, and when they all at the same time say the same things, I've warned you before, that's the playbook of shorts. They send out a script. It's the playbook of influencers and manipulators, whether in politics or in finance or anything else. They are trying to sway your sentiment. And so what happened is, and here's a partial list. There was one or two more that hadn't put on the list at the time. And you will recognize these. These are really big accounts. FX hedgers. It's like Peter St. Ong. I don't know how to pronounce his name, but you'll recognize him. Wall Street Silver, Libs of TikTok, Jack Posobiec, the redheaded libertarian. So all of these people who claim to be, pro freedom, pro, let's say, I don't know, civil rights and liberty and all of that stuff, had a concerted effort. All of them at the same time attacked AMC over this City of Dreams movie. They claimed that AMC was effectively suppressing the movie. And go back and find that video of September 7th. I proved with math, because The Sound of Freedom, as you might remember, was amazingly successful. It was huge. And I showed the first, 7 days. And then I think I even showed maybe the first 30 days, the opening numbers of the movies, and why Sound of Freedom was completely supported by the exhibition, the movie industry, exhibitors, and not just AMC, right? You got Cinemark and Regal and others. And Sound of Freedom did very well and was selling tickets. So, of course, they kept it showing on screens. City of Dreams was not supported by marketing. People were not coming. People were not buying tickets. And so exhibitors, can't afford to lose money. And so it wasn't just AMC. It was also Regal. It was also Cinemark. It was others. Said, well, we're not making money on this. We can't keep giving it screens. We're not running a charity here. And so I had kind of done a video showing you how all of these people were attacking AMC. These are very big accounts. And I will just tell you, there's a lot of people out there, probably some of you listening to me, who believe these people are, like I said, pro-freedom, pro-America, let's, stop tyranny and all of that stuff. These are things that I actually believe in. I am anti-tyranny and I am pro-freedom. And I stand up for that. But standing up for that also means standing up against people who lie to you and pretend they're for you. And so that was one of the things I was trying to show you. Go see that video if you missed that happening. That was in the middle of Q3. Now think about all of these accounts basically pressing for a boycott against AMC. They didn't talk about Cinemark. They didn't talk about Regal, who were doing the exact same things, taking screens away because this movie did not perform well. They only talked about AMC. And so what would you think that would happen? If people are blinded and think that these people are only truth speakers and not manipulators, then they maybe didn't go to AMC, right? And so that impacted our attendance, and I want you to remember that. And so it was literally a repeat of things I've said. I could go find tweets for you from every single year we've had this journey, 2021, 22, 23, now 24 and 25, telling you that if people are attacking your best interests, those people are not for you. And it happens in AMC. I've seen it happen in GameStop. I've seen it happen in politics. There's all these people who draw you in, pretend they're saying the things you want them to say, and then suddenly are actually sneaking in all kinds of negativity and attacks against your own best interests. You got to start paying attention to that stuff and going, all right, I'm blocking these people. I saw an AMC account just today reposting this Libs of TikTok, forgetting that just last September they were completely attacking AMC. So I just call you guys to pay attention to this stuff because, if you believe like I do that we are fighting the biggest market corruption, the biggest powers, money, power, connection, then you can't ignore when that money and power and connection puts its grip around some voices, right? So it should be kind of obvious what's going on. And it got even weirder, guys. So there's another video September 9th. So it's just 2 days later because what happened is I went into my DD mode and started learning what was going on. And thankfully I've got some, other folks who like to do digging and shared a couple things with me too. It turned out this movie that all these accounts were attacking us for was actually produced and put out by undercover financiers. And so it actually was put out. I'm not making this up. Go back and watch my video from September 9th. There was a wealthy mortgage backed securities trader, someone who actually was tied to, like, I think it was Forbes or somebody had named them in 2008 as basically kind of being identified as part of the problem behind the entire financial meltdown of 2008 and 2009. This was the person behind this film we were getting attacked by, and who currently runs a fund that hedges based on kind of like mortgage backed securities and things like that. You guys were, if you believed all of this stuff from all these accounts, you got played by a hedge fund manager who was part of the '08 financial meltdown. I don't think they even ever wanted this movie to succeed. I think this was all part of a big psyops. They put this thing out, if it works, they make money. If it doesn't work, they attack AMC. And I think some of you fell for it. You're out there still following these same accounts. I see you doing it, and you think that these are conservatives. And actually, I just think they're accounts that are mercenaries out there for the highest bidder. That's honestly what I think about most of these accounts. So go back and look at my videos from September 7th and September 9th if you didn't know that happened. So now I'm about to review our quarter. And if you'll remember, in the quarterly review, and I live tweeted that. You could go find all the live tweets or go listen to Adam. I always say it's better to listen to the source than to hear people like me talk about it. Go listen to Adam and Sean talk about it. The recording is probably out there somewhere. In the Q3 earnings call, Adam and Sean talked about how our attendance had taken a hit. Now, they believed that was due to there were a couple of the movies that basically didn't play as well in urban centers, and so some of AMC's biggest attendance is, let's say, in Los Angeles, New York, LA, etc. And so there was a shift to more suburban theaters. So perhaps like Regal or Cinemark, kind of maybe they've got more market share in some of the suburbs. Side note: I happen to be in a suburb, and in all of Oregon, in fact, there's only one AMC, and it's not too far from me. So sometimes I try to drive over that way. But the point is, in the suburbs, AMC doesn't have as many locations, and that rings true here. We only have the one, even though there's dozens of theaters in my kind of local vicinity. And so that I hear what Adam and Sean were saying, that part of the attendance dip, and I'm going to show you that in just a moment. So I'm just trying to explain it before we actually look at that, because it matters that you get context behind the numbers. Part of the attendance dip was there were a couple movies that just played. Twisters was one of them, and I don't recall off the top of my head the other one they named that was just far more suburban. And then what's more, I had reviewed, interestingly enough, Cinemark's results right before AMC reported our results, and I noted in that video that you can tell that Cinemark is bigger in Latin America, like Mexico and South America, whereas AMC has Odeon and UCI and some other things in Europe. So AMC is a little heavier in terms of international business, heavier in Europe, whereas like Cinemark's heavier in Latin America. And I think it was Deadpool, which obviously was the huge movie of the summer, which played bigger in the Latin countries than it did in Europe, is also what Sean and Adam talked about. So we took an attendance hit, and you are going to see that in the numbers. So what I'm suggesting is it was a dual hit. We had, I think it was actually Inside Out 2 and Twisters that they shared with us. AMC has a lot of analytics. They see numbers I don't see, and I trust the team. And so they said, hey, we saw more of a suburban attendance for these, and we took a little bit of an attendance hit over that. We did see this attack by all of these so-called conservative accounts. Go back, you'll find it. Just look up their profiles and look up AMC, so long as they haven't deleted all those tweets. You will see it's a very concerted effort by all of them, and it was outright lies. Like, I proved it. You'll see my tweets about it too at the time, and these videos. So combo of the suburban, urban, and Latin versus Europe mix, and then the attacks. And I would actually suggest one more thing, which is I did some DD also. And I do think that perhaps AMC's ticket price level was getting a little high, and maybe there's a few discount consumers who found their way to other locations. I know we have in the UK a competitor who is, according to Adam and Sean, pricing below the market even. Obviously, they can't keep that up forever. So a lot of... All right, guys. Hey, sorry, just jumping back in. Man, I'm slipping apparently. This is the third video in a row I think I had to clip because I found a mistake on the slide as I was going through. I had let this slide sit. I really did the slide, right after Q3, and then obviously I think I've been pretty real with you. I was a little disappointed by the attendance numbers. We're going to talk that through here, and that's okay to say. That's not shilling. That's just things are not a straight path. I am very confident the team has been working on that. But actually, real quick before I get into that, so the issue was I think I hadn't finished just one of the little boxes here, and as I went through the slide with you, I recorded this, and then I got to that box and I was like, man, those numbers don't look right. So thankfully I caught that rather than spreading, my own accidental FUD. So we're going to go through this. I'm not quite sure where I left off then. Hopefully this will tie well, but here's the point. I reviewed this slide quarter in, quarter out, have since 2021. You can find it all the way back there on Reddit. Um, excuse me. And I'm committed to sort of that when you measure numbers, numbers tell a story, and they keep you objective, right? They don't let you get into hype. They don't let you get into fear. They keep you in the objective middle. And so that's what this slide has always been. And I've committed to sharing it, quarter in, quarter out, even when it doesn't tell the story we want. So hopefully now you get that there's this context of, I'm kind of calling it a three-headed monster of what I'll call sort of fake accounts who all got the scripts and attacked AMC. Go back and review those, like I said. Then there's this piece of this urban versus rural mix, with Inside Out 2 and with Twisters. And then there's kind of a European versus Latin mix with Deadpool. And I think I had already said, but just forgive me in case I hadn't said before. I'm not going back and listening to myself, so I'm not sure what I've already told you in this video, but I might have already said that obviously AMC being much heavier in Europe, whereas, like Cinemark being heavier in Latin America, so Deadpool kind of benefited them a little bit more than us. So all of that put a drag. So let's go through the numbers, and there are some actually bright spots, some rosy pictures in the middle of all this, but everything really comes down to attendance, and that's what you're going to see. So first off, year over year, our current assets, we are at $789 million, which is down 19%. But here's what you got to see and why I'm calling that still a green, traffic light. First off, we left the quarter with almost $800 million of current assets. You'll hear different numbers in terms of if you just looked at cash, because current assets keeps accounts receivable in the middle of that, and it keeps some reserved cash on that. So I'm just giving you the total current assets, which kind of can be considered our overall liquidity. So almost $800 million we left the quarter with. But note too that while that's down a little bit year over year, we paid off $700 million of debt year over year. So to come out with $800 million plus in that same year had paid down $700 million of debt, which is that debt slide I showed you, if you want to go back to that, that is really, really great for us to be sitting on that much current liquidity while having paid off almost $1 billion of debt through the year. That's a big deal. All right, so I mentioned the attendance number. I'm not going to spend time crying over that, but I'm just going to admit to you that I didn't see that coming. I don't think any of you saw that coming. If you find me someone who actually predicted that, kudos to them. But that's why I'm not taking an L on that one, just to be real frank with you all. And that's why I haven't bothered dealing with trolls and shills on that, because literally no one predicted that. I use a trend to forecast attendance, and for 5, 6, 7 quarters, I had nailed it. And then all of a sudden this kind of came out of nowhere. And that's why I wanted you to have the context about a lot of things that happened. So attendance was down 12% year over year on a box office that was up 0.5%. So you can see at the top here. And so I would have expected far, far better attendance. That is a pretty big dip. I am sure that the team is addressing it. So I would just say, hey, take a breath. Let's see how Q4 came out. One quarter is not a trend. I don't know yet whether this is a blip or whether this is something bigger. I have a feeling it's a blip, especially because of that rural versus urban mix that Adam and Sean talked about. If you didn't listen to the earnings call, go back and listen to that. They clarified exactly what went on with the attendance, besides what I'm kind of conjecturing about sort of the attacks against us. And so what you would see then is in the U.S., our attendance was down 9%. Internationally, there's that European versus Latin mix. We were down 17%. And so you're going to see that, of course, impacts our food and beverage number. If you have less people, then there's less purchasing of food and beverages. It impacts, of course, our admissions number. That's less tickets sold. And then I don't have merch on this page, but that would impact our merch number as well. Although interestingly then, even though the attendance was down, and again, I just have full confidence that the team knows that and is working on that. And so let's see what comes out of Q4. Um, and then side note too, again, keep grounding yourself. There's a reason I showed you the 2025, a little bit about what's coming, that the box office is going to be even farther growth than all of this, and we have really bright things ahead. And so if AMC, if the whole short thesis, or really the short squeeze thesis, was I can hold longer than you can stay solvent, we're saying that to the shorties. That's what we said all the way back in 2021. AMC is not headed for bankruptcy. I cannot stress that enough. I feel extremely confident we're not headed for bankruptcy. And then if the industry is recovering, then while I don't like this attendance dip, and I can be honest with you that I don't like it, and I don't like having to put red numbers up on the screen. I would have loved to have been right. I can't remember again, forgive me, because I had to clip the video. If you're new to me, I have a long track record of getting these numbers right, of being 97, 98% accurate. So pardon me if I'm repeating that, if I'm repeating myself, but I don't like not having gotten it right for you guys. That was a bummer. And so, but in the middle of that, interestingly, look at our attendance was down double digits, and yet our food and beverage was up. That tells you what's happening with the offerings at AMC. If you've tried like the flatbread pizza, the big pretzel, the pretzel bites, the donut holes, some of the fun drinks, the cocktails, and all of that. There's a really great offering at AMC of food and beverage, and so I think they're doing a great job there. So you can see that even though attendance was down, our net revenue, I measure the bottom line on food and beverage so that we're capturing the costs as well as the revenue. Our net revenue, which is just revenue minus expenses, was up 2%. So we kind of had gained a half point of margin, and then additionally, I think some of our overall price mix was up, and so we gained $8 million year over year on the food and beverage. So fantastic to see. Just imagine if we can improve the attendance again, then food and beverage sales are going to fly, which is what I was kind of showing you in past forecast videos. So in terms of where we're positioned there, that's looking pretty good. And then you can see admissions. So I mentioned maybe a triple-headed monster on attendance. The one is the attacks by those accounts. The one is the urban-rural mix and the sort of Europe versus Latin mix. The other, I'm just wondering if we are going to have to address pricing. I'm not sure yet. Don't let me FUD you on that. Part of AMC's higher prices is we obviously have IMAX, and Dolby. At my AMC, there's something called GXL. It's like a bigger screen. You've heard that the team is going to be investing in premium experiences. So premium certainly has a higher ticket price. So that could be part of what's driving us, and that's highly profitable on a per person basis. But something's going on where our ticket prices were actually up almost 6% year over year, and of course then you saw that based on our attendance being down, so then our admissions number was down year over year, almost 7%. So we improved. We didn't go down by as much as attendance. That's the improving the ticket price being higher. But then overall we're still down because attendance dragged on us. So admissions obviously a big part of AMC's revenue. Don't like seeing that down, so I'm trusting the team to be addressing that. So that's what I'm just telling you guys. The revenue was hit by attendance. That is the whole story pretty much, although I'm going to talk about some refinancing costs here in a minute. And so then assets versus liabilities. What I wanted to mention is you'll see kind of there's a mix on this page. I talked about it being kind of a balanced scorecard. If you're in business, you want to look at a mix of metrics so that you don't get over focused on any one thing and miss something else going on in your business. So you would see like over here on the left, this is from the balance sheet. This number here on the right is from the balance sheet. This green box here is from the balance sheet. Then there's a lot of other items that are from the income statement. And so I've said for a long time, I'll go make an educational video on how to read an income statement, how to read a balance sheet. Would love to do that for you guys. And just, part of my mission here that I've been here this whole time is taking things I know. If you're new to me, I actually, pardon me, I think I already shared on this video, but just in case, I do have 2 master's degrees in business. And so, I'm trained on some of this stuff. And I would just love to share it with all of you and kind of educate retail. Like, I want us to beat Wall Street because I'm tired of their corruption and their manipulation. And what beats manipulation? You can't be manipulated when you're educated. And so that's what I want to keep doing. So this is on the balance sheet. You could check this. You could fact check me on all of these assets versus liabilities. What we're looking at is AMC kind of getting healthier. We talk about a healthy balance sheet as we're paying down debt, which is a liability. Then, or if we're, catching up on some of those past due rents, that's a liability. Then, if our our mix of properties we still have, and if some other assets that we own, you know, hold more value versus our liabilities, then we're getting healthier. And so this assets number is kind of the top of a fraction, like the numerator. This liabilities number is the bottom of that fraction. So what you want to see is this number getting bigger. And sure enough, year over year, in spite of our attendance issues, I think really mostly on the back of paying off $700 million of debt, we are up 2% on this number. So last year at this same time, you know, in the Barbenheimer quarter, we were at 80% assets to liabilities. And then this year we're at 82.2%. So that's improving. Love to see it. I would love to see continued growth there. Our operating expense as a percent of revenue, that's something else I measure, which is just, you know, kind of how profitable is it to keep the doors open. And you want to see this number get smaller and smaller. And so in the Barbenheimer quarter, last Q3, you could see we were down to 83% basically. And I'm saying we eroded. Thus the yellow, it's not a very big move, so I'm giving it the gray box, but the yellow arrow kind of saying, hey, we did go down. You can see last year, it basically, the cost of having our doors open, our operating expenses were at about 83%. This year it's closer to 85%. So we kind of went the wrong way a little bit. And again, that's really driven on this attendance number. If you think about operating expense, you know, I've talked about operating leverage and how as the box office grows, you're going to see AMC's profits grow faster than the box office. And so, for example, if you have a general manager at a property, whether you show one movie or 100 movies at that property, you pay your general manager, right? So isn't it great when you get to spread the cost of paying that general manager over a lot more movies? And so that's what I'm talking to you about, that as the box office grows, you will see this operating expense, sort of the cost of management, going down versus our revenues. And that's going to mean we're more and more profitable. So that's why I have that measurement. And again, you can track this all the way back on Reddit to 2021, and then I've done a lot of videos on it in the meantime as well. So our free cash flow, oh, and then by the way, this is significantly improved since 2021 as well. This number used to be even flip, where it was like our expenses, just operating expenses, were higher than even revenues. And so we've gone the right way. I just want to see it continue. Our free cash flow, so yeah, we went the wrong way. And that is just, again, all on the back of our attendance dip. Where, you know, last year at this time we had positive free cash flows in the Barbenheimer quarter. Note, you know, at the bottom of this little asterisk, we've had 2 positive free cash flow quarters in our journey here. And that is also why keep grounding yourself in what's coming in terms of this box office turnaround, in terms of popcorn growth, candy growth, all of that. Because, you know, if we've done it before on higher debt with less popcorn and less candy, and higher rents and some other things like that, that's been my continued thesis, that I show you guys in our fundamentals that we are becoming more and more profitable. And all we've been waiting for is the box office recovery. And it is literally knocking at the door. Like, it is around the corner. Look at the 2025 movies again and the timing of when they're coming. That's why I keep hammering that home, so that you really understand that, so you kind of FUD proof. But so yes, our free cash flow went negative, and, you know, went the wrong way. $100 million, you know, worsening year over year, and just again really on the back of all of that attendance. So you're just hearing me, attendance. I hope these guys will be able to show us something far better in Q4. I kind of have some hopes on that. We're going to talk about that in a minute. Accounts payable versus accounts receivable. So now we're back to the balance sheet here. That is something I show you, where what I've explained before is accounts payable is like it's on my credit card. I don't have to pay it off just yet. And as long as I make the payment in time. So that means there's cash sitting on my side, but I owe somebody. Like, let's say somebody gives us a big shipment of popcorn kernels, but maybe we don't pay them for 30 days. This is very normal in business. And so if I have more money in the accounts payable, I'm waiting to pay money out. So I get to sit on the cash. If I have less money in accounts receivable, let's say that goes down, that accounts receivable is I'm waiting for someone to pay me. So let's say when we had Taylor Swift showing in a Cinemark, and Cinemark needs to pay us part of their revenues for that. Remember, we made some money on that. Well, so if I'm waiting for someone to pay me, I don't have the cash yet. So I show that number because I'm tracking how we're doing at keeping cash on our side of the books, because that is the short thesis breaker, is profitability and liquidity, right? So this is a measure of how we're doing on kind of our cash flows. And you'll see that our accounts payable was down 24 million. and our accounts receivable was down 26 million year over year. So really what that means is sort of a $2 million swing of cash to our side. If accounts receivable was down by more than accounts payable, we're kind of $2 million cash improvement to our side. So that's why that's a green box. And then finally, the overall, just bottom line, I'll show you every time, our net loss or gain. We lost $21 million on the quarter. Now remember that includes some non-cash items. You have things like depreciation and amortization and some other things in there that are not cash expenses. But you do see that we had a loss of 21 million on the quarter where I had forecast a pretty big gain. And so that's all this attendance dip that I did not see coming. And that is a $33 million worsening year over year. And I mentioned here that that's driven on attendance, but actually don't miss, if you go back and review, there's a video I just did about AMC's interest payments. We did have refinancing costs in the quarter as well. So the sort of hidden silver lining there is those are one-time costs. You wouldn't expect those to continue. So if the team can work on attendance, plus now you don't have the refinancing costs again, you should expect some improvements if we have sort of similar box offices. So that again is why I'm not stressing out and hadn't talked to you about this sooner, but I wanted to kind of circle back to this. So bottom line, attendance, yes, it was a disappointment. We had rural versus urban attendance. We had the pricing issue. We talked about Europe versus Latin America in terms of Deadpool and some others. And attendance drives everything: admissions, food and beverage, merch. So I am actually pretty hopeful we're going to turn around and talk about something a little better in Q4, but let's see. We talked about the food and beverage growth. So if we can recover more attendance, that is going to drive some pretty big profits. And then just don't miss that the key portions of the business are continuing to get more and more healthy. Debt is down, rent is down. There's a lot of things that have gotten better that I'll continue to show you when I do the deeper level forecast videos. And so we're looking more and more healthy in terms of our fundamentals. We just got to make sure and kind of babysit this attendance for a minute. And then $700 million of debt pay down year over year. And then don't miss that since this quarter closed, since this page that I'm showing you, we've actually paid off another $45 million that wouldn't be reflected in these numbers. So one of the things too, I'll draw your attention to when I had done the forecast, so there's at least something I got right. Before we had the earnings release, I had talked about something called capital expenditures. A minute ago, I talked to you about operating expenses. There's something else called capital expenses. It's basically more like long-term investments, strategic investments. And so I had said, hey, you are going to see some, eventually you're going to see strategic investments from this team, and that's going to start to show in our results. And I had reviewed that. And then oddly enough, just like a couple days later, Variety had posted an article about overall like theater owners planning to invest. And then sure enough, in the earnings call, Adam and team, announced the Go plan and all of that. So that was one I, got that one for you before it happened. And so just thought I'd kind of at least have something I show you that I got right. All right, so look ahead to Q4. Note that the Q4 box office was again well over $2 billion and the biggest of the Ape era. So we're going to have our best Q4 we've had yet, I believe. One thing, so I will share the forecast video before we have earnings. I'm just waiting on AMC to announce the earnings date, and then I'll probably show that to you. I will tell you that on all of our forecasts in Q4 and all of 2025 that I've been talking to you about, I have not allowed myself to just say, oh, well, that was a one-time dip on attendance and we're right back to where we were. If I did that, I would show some really great numbers. But what I've decided to do is just stay conservative and say, I do believe we'll have some swing back towards our way, but it's not going to be overnight. And so I've stayed a little bit conservative on attendance, and I'm going to end up showing you that. But just so that you know, the box office was the biggest of the Ape era. Paddington in Europe. So keep in mind that I'm showing you the domestic box office, but Paddington had a funny timing thing where it already released in Europe and actually was setting some records in the UK in terms of the Paddington franchise. It did very, very well, had some great numbers, where we have Odeon and UCI and some others. I think we're kind of in the Nordics as well. And so Paddington will, pun intended, pad our stats a little bit, because if I use this method where I kind of extrapolate out from the domestic box office, but we had a movie that was not here, it's about to open up in the US in February, but we already had that in our results. So I'll end up including that when I show you the forecast. Remember when I do get to it that Q4 kind of contains impairment and I talked about other non-cash expenses? Because you're getting fudded a lot, I believe, on cash flows. We will have some cash burn. I don't mind admitting that, but I showed you we came into the quarter with almost what $800 million of current assets, and since then, recall that Goldman Sachs has given us almost $200 million. So yes, we have some cash burn, but in your mind, think if $1 billion ish is the starting point of our current um, assets from September 30th forward, then all we have to do is the whole survive then thrive, right? We just got to make it until this box office turnaround. Well, I've told you time and again that Q2 is huge for us and Q4 is huge plus and Q3 is really great. So we're about to hit 3 in a row, just amazing quarters. And not to mention that, go back and review those 2025 videos, those two that are kind of about cash flows. But remember, cash flow is real time. So we're about to have Dogman and Captain America and Paddington and some other things that are helping our stats here in Q1 even. So I am not concerned about any kind of liquidity issues. And then attendance, already talked a lot about that. And then, yeah, already kind of hammered home the 2025 videos. Do not forget then, just ground yourself at the simplest view. We are here in terms of a rolling year and we're headed up, up, up very, very steeply, right? So good things coming. And now I just want to switch directions a little bit. So it's our 4-year anniversary of the buy button being taken away, right? So this morning early, I tweeted, I'm going to go ahead and actually read this for you because I think a lot of you here on YouTube don't follow me on X. And I just think this is a big deal. Our 4-year anniversary of the buy button, I think it's a big deal. And I just want to share with you a little bit of my thoughts on that. And so forgive me, I'm going to just kind of read a tweet I posted this morning. Maybe it resonates with you a little bit. Maybe there's someone out here who hears this and has any kind of influence and needs to understand, like, hey, our markets are broken. They are not working for the people, and that's why we're here. And we need to fight this fight. I said in the last video, we fight today or we doom future generations to fight another time. And I'm not doing that. I'm not going to hide from this fight. So let me just read this. I remember January 28th, 2021 very well. I was there. The day big money declared war on retail investors. While many are quick to remember the malfeasance of Robinhood, Citadel Securities, and Interactive Brokers, less are aware that brokers like Fidelity, E-Trade, and others were down. In some cases as long as 90 minutes. Let me pause on that, guys. My broker was down. I was not in Robinhood or Interactive Brokers. My broker was down for 90 minutes, and I had no access to the market. That is also the buy button being taken away. So don't miss that part of our journey. All right, GameStop, AMC, and several other stocks were placed on position close or sell only at Robinhood and IBKR, while other brokers circled the wagons and locked us all out of accounts completely. It was the moment we all learned this rabbit hole goes deep, and the wealthy and politically connected will stop at nothing to maintain a status quo of fraud, manipulation, cheating, and corruption. Since then, we learned stock tokens, which are supposed to be securitized, were created the night before all of this. Ultimately, part of FTX's downfall and CZ going to jail. We've seen Archegos, Nomura, Iceberg, Citron, Anchorage, Chanos, Credit Suisse, FTX, and so many others close their doors, be embroiled in criminal proceedings, or go bankrupt. We witnessed the JP Morgans, B of A's, Citadels, and others of the world openly commit fraud, such as spoofing or mismarking shorts as longs, or failing to accurately report billions of trades, only to be slapped on the wrist by tiny fines, many of which were never collected. We saw Gary Gensler openly admit as many as 95% of retail orders never go to a lit exchange, then do nothing to stop it. We watched Congress ask Gensler to turn a blind eye to FTX, and we saw Hester Pierce do Wall Street's bidding by opposing actions to increase transparency, while Wall Street delayed new requirements for years, many of which are still delayed. For 4 years, media arms of hedge funds and large conglomerates owned by wealthy billionaires have abused, cajoled, gaslighted, and in some cases openly lied about us and our companies. We learned about swaps, derivatives, infinite liquidity, failures to deliver, tokens, nanosecond high-frequency trading, wash sales, naked shorting, and all manner of cheat codes used to control the price of our shares. We've seen online manipulators and influencers do the bidding of their masters and learned of NDAs, paid actors, dead drops, and scripts going out. We've run that gauntlet and refused to back down, shut up, go away, or acquiesce. We are retail. We are not leaving. We demand justice, transparency, and a level playing field, and we will win. So let's go.